Now, the big news is the digital currency group. If I could pull that up, I just saw an amazing article by Dirty Bubble Media. You should follow him on Twitter. He actually, I remember he was ahead of the FTX game. He was calling out Sam Bankman-Fried before they were officially insolvent. And he was right on that. Another person who you should follow is Arturo. I remember him being ahead of the game with Celsius. I don't know if Dirty Bubble was ahead of the game with Celsius, but these people are really at the forefront. They're really in front of the news. That's where you really go to Twitter. You could find people that are like ahead of the news. And he is not saying good things about the digital currency group, which it's not looking good if you'd have to ask me. He's also saying not good things about Coinbase, which is a little bit scary. But I guess we're going to see how it plays out. Let's go read this article. So he says the digital currency group. Am I shared screen? Oh, perfect. Digital currency group has long been a darling of the crypto industry, led by early Bitcoin adopter Barry Silbert. DCG acts as the parent company for a group of crypto-related firms that touch on every aspect of the crypto economy. One of the major components of his business is Genesis Trading, a global leader in institutional digital asset trading, derivatives, lending, and custody services. Not your keys, not your coins. One component of Genesis Trading is Genesis Global Capital, a crypto lending firm that managed funds for other institutional partners. So one of the largest of these customers was the Gemini Exchange, which operated its own yield program targeted at retail investors. So you had Gemini was using Genesis, and I know Gemini Earn halted withdrawals. So the people that put their money there are not getting it out. We'll see how that plays out. So far, like if you just go off previous performance, like of Celsius and Voyager and things like that, it's definitely not looking good. And that's definitely not looking good for Gemini as an exchange if they're just losing customers' money. Has the name on it. It's Gemini Earn. So, I mean, it's not officially Gemini, but it carries that name. So it's definitely bad for the brand. He says Genesis and DCG were long assumed to be one of the most reputable and rock solid entities in crypto. After all, Genesis is a licensed and regulated broker dealer. DCG also owns the Grayscale series of publicly traded cryptocurrency trusts, which has been a cash cow for their overall business. Thus, industry insiders were not surprised when Genesis Trading took to Twitter on November 8th to announce that they had no material net credit exposure to the collapse of FTX exchange. So yeah, there's just so much lying going on in the space. I don't know if it's going to, if anyone's going to get held accountable. I guess technically maybe there's no regulation, so they feel like they could get away with it. But you see here, they said, with regards to today's market events, we have managed our lending books and have no material net credit exposure. In addition, Genesis has no exposure to any token issued by centralized exchanges. We continue to meet the needs of our clients across the around the world, across all products. So that was on November 8th. And then November 9th, they said, we want to provide an update on where things currently stand with our lending business in anticipation of the extreme market volatility yesterday. We hedged and sold collateral, resulting in a total loss of $7 million across all counterparties, including Alameda, which is obviously affiliated with FTX. So they said, as part of our goal in providing transparency around his this week's market events, the Genesis derivatives business currently has $175 million in locked funds in our FTX trading account. This does not impact our market making activities. Okay, so they said, so finally they told the truth and disclosed that they were involved in FTX. And then November 16th, Digital Currency Group tweeted, today's Genesis Global Capital at Genesis Trading's lending business made the difficult decision to temporarily suspend redemptions and new loan originations. Temporarily. We've heard that word too many times before. It's just getting ubiquitous with temporary basically means permanent. It all started, I remember, with Celsius was temporarily halting withdrawals, and then you had BlockFi was temporarily holding withdrawals. I remember they were attributing it to Juneteenth. So just like a lot of dishonesty, And the fact that all these middlemen, all these counterparties, all these centralized entities that are using crypto not as intended are all so quick to like try and reassure everyone that things are fine. I mean, if you're back to one, your liquidity should speak for itself, meaning you should just be able to let all the customers that deposited cash out. But the fact that, you know, they always have to, they're quick to say that, no, we're back 1-to-1, we have no issues. And then all of a sudden they have a liquidity crunch and they can't let people take their money out. I mean, it's just really goes to show that that they're not really being honest and they're doing things, shady things with the customers' funds and things like that. So it says, now Genesis and its parent company, Digital Currency Group, are desperately seeking a bailout to the tune of $1 billion. According to reporting from multiple sources, Digital Currency Group has been turned down by everyone from Binance to Wall Street vulture private equity firms. In the meantime, the customers of firms like Gemini are unable to recover their funds. Gemini alone are owed some $700 million. That's insane. So why have DCG and Silbert struck out? It turns out that behind the scenes, Digital Currency Group has engaged in financial chicanery to keep the company afloat. So then he goes on, what's Digital Currency Group? So that's basically Silbert was an early adopter of Bitcoin. Then he started a bunch of these big startups, big money. So he has Grayscale, you know, that's like custody for Bitcoin, Genesis, Foundry, CoinDesk. Could be maybe a little bit of conflict of interest in their reporting if they're affiliated with the Digital Currency Group. But basically, Silbert wrote a letter to his shareholders. Can read the letter here. So it says they had massive exposure to 3 Arrows Capital, being owed some 1.2 billion. Right, so that was Genesis was owed 1.2 billion from 3 Arrows Capital, and the Digital Currency Group basically came to bail them out. Right, so it says it turns out that Digital Currency Group didn't fill this hole with cash. Instead, they issued a promissory note for 1.1 billion to Genesis. So basically, they said, "Okay, so we will give you this amount of money after this given period of time." And clearly, and it seems like they're going to struggle finding that liquidity. So it says Digital Currency Group owes investors 350 million. So I don't know how they're going to pay back 1.1 billion if all this is alleged in this article is true. And they borrowed 575 million from its subsidiary Genesis Capital. And what they were doing, it says here, they were doing it to fund investment opportunities and buy back Digital Currency Group stock from non-employee shareholders. Wow. Sounds pretty similar to Alameda, you know, sending money to FTX to buy up FTT so they had more money. Basically, you buy shares of Digital Currency Group's equity of their stock, and then it shows they have a bigger balance sheet, even though it's a liquid, and then they could basically go to creditors and say, hey, can we borrow money? Look how much money we have in assets that, you know, we could sell in the case of insolvency. This is very interesting. Same flywheel thing here. Manage funds for institutions, borrow the funds yourself, invest in your own stock, hope equity price rises, raise cash through the equity sale loans. Yeah, it's the flywheel. They had that with Celsius. They had that with FTX. And now he's calling it with the Digital Currency Group. And he's been right many times. Is my audio coming in well? Looks like it. Okay, let's get back here. So it says here, it's worth repeating this to make clear just how ridiculous this decision was. Genesis borrowed funds from groups like Gemini, largely generated from unlocked deposits by retail customers. Saying Gemini, I guess it was Gemini Earn. I don't think it was like regular Gemini. That would be crazy. This meant at any time, Genesis could expect large withdrawals of those funds to occur. Instead of investing in liquid assets, or lending those funds to other solvent trading firms, digital currency took the money for themselves and plowed it into totally illiquid investments. Wow. Same mistake that Celsius made. Failed crypto lender used billions of dollars to invest in Bitcoin mining. The illiquid sell token, FTX did it with FTT. That is crazy. So then he talks about Grayscale, which is their most profitable venture, 75% of the total expected revenue. So that's their only way of raising money. So that's the most profitable venture. 75% of Digital Currency Group's total expected revenue. This does not include the roughly dozens of other products. So I guess the big question here is as to whether or not this would, if Digital Currency Group would go under because Genesis is insolvent and they can't pay back their debt and things like that, then what really happens to Grayscale? Would that roll over into Grayscale? Or is Grayscale going to have to start liquidating their Bitcoin holdings, and just giving back their investors cash, or maybe just giving them Bitcoin, like either or kind of thing? So I guess that's really the big question. So just to be fair, I got an article over here saying that it says Bernstein says Grayscale Bitcoin Trust is protected from fallout at sibling company Genesis Global. So that's but isn't CoinDesk owned by CoinDesk, which is owned by Digital Currency Group, is saying that Grayscale, which is also owned by Digital Currency Group, is protected from the fallout. So I don't know. You could read the article here. It's at a huge discount. People don't want to buy it. But what do you guys think? Do you guys think that Grayscale would be unaffected by this fallout? Because CoinDesk is saying it would be unaffected. But my take is that we just heard this so many times, and when we've heard like this so many times, we heard this idea that no, nothing's really, there's no problem really, everything's okay, and it always turns out that everything's not okay. In fact, pretty much every time they've been saying, oh yeah, we're just having a little bit of liquidity issues, we have to stop withdrawals, things are going to be okay. Things weren't okay, but is it going to continue? I guess Gemini so far has been okay. Not Gemini Earn, but regular Gemini has been okay. They've been allowing withdrawals, but I guess only time will tell. It seems like we're at peak FUD, but I mean, it really just depends on the circumstances. So I guess as things play out, we're gonna see more. We're gonna see if we go to 11K and even lower. I guess that would depend on how these things play out. If these companies are insolvent, then that would be really, really bad for crypto. But people are saying do I even need these headphones on? A lot of people are saying that this would be the end of crypto. Like if Digital Currency Group goes under, crypto would be done. But I don't think that's true. I think there's just so much consensus especially with regards to Bitcoin and Ethereum and things like that there is going to be big money that'll want to pick it up at a certain price. I mean, the question is how low is it going to go? But you see these big names like Kevin O'Leary, Scaramucci, who else is there? All these funds. I know BlackRock is doing cryptocurrency now. Just very, very big, very wealthy people are interested in crypto, and there's consensus among them that it's worth something and that it's worth holding. So, I mean, if all these companies go down, if let's say Digital Currency Group and Coinbase goes down, which would be insane, then it will inevitably, they're going to have to there's going to be some sort of cascade because they're going to have to liquidate in order to pay back their investors and maybe some of their depositors and things like that. But inevitably, as the price gets lower and lower, there are going to be more people scooping up. Just like think to yourself, if Ethereum's going to, under $100, are you going to buy some? If, like the projects are still going, they're still building, the community's active. Like, I mean, people, maybe not me because I would prefer Hex and Pulse and PulseX, obviously, but there just would come a point where people are going to buy. And I think also this industry is very profitable. Like, if like people would want to own an exchange, and operate it with integrity and not use their users' funds, because you can make a lot of money. I mean, just the problem is people get greedy and they think they could get away with whatever they want, and they could just basically, take their customers' funds and trade with it, or just, create political donations and things like that. Like donate to, the Democratic Party, things like that. And that's when things really get bad. But even if it was highly regulated, I think there is a market, to run exchanges, and there's a market for crypto, and it will inevitably come back. The question is just how low could it go? That's really my take on that.